Yo, welcome back traders. Today we are going to be talking about the new week opening gap. You must have heard this from ICT traders. New week opening gap. This is the new week opening gap, which normally happens every Monday when market opens. So today I'm going to talk about this and then how to frame a trade idea from this new week opening gap. And this is on DSY, the dollar index. And of course, we trade this in line with the higher time frame. You go to the higher time frame and see price direction or see where price is seeking to trade into. Okay, now this is the gap from the hourly time frame. Let's go to the weekly time frame and then we can frame a trade idea from there. So this is on the weekly time frame. As you can see that price has already taken out a liquidity from the weekly time frame here. This is a buy side liquidity which price has taken out, and if you zoom out to the left side, you get to see that we have an imbalance right here, what we call the inefficiency or a fair value gap, whichever you prefer to call it. So you see price has traded into this imbalance just a little bit, but we want to see price trade at least 50% into this imbalance. Okay, we have our 50% at the middle right here. We want to see price trade into 50%, and now you can see that price closed above this buy side liquidity, which is showing a more tendency that price is going to reverse back into this place. So this is basically just a retracement. So price trade from an external range liquidity to an internal range liquidity, back and forth, back and forth. So we have already taken out an external range liquidity and price is seeking an internal range liquidity. Where do we have an internal range liquidity? We have one right here. This imbalance, let me zoom it out so you can see properly. So you see we have a weekly imbalance right here. It's an internal range liquidity which price has traded into. Okay, we mark that out. And then let's go to the hourly time frame. Then you can see why price is struggling to come down to this point. Yes, this on the hourly time frame, and then price traded just like about 30% into this new week opening gap. Definitely I want to take a trade whenever the gap has been filled. Okay, it sometimes signals price direction for the week where price is targeting. So you can see how big this gap is. It's also giving you some sort of information that price is going to that direction for the week. In this case, bearish direction. Now price traded about 30% into this imbalance. We have our 50% here, but price decided to trade 30% into this imbalance before dropping. And definitely we know that price is going to fill in this gap completely. Since I already have in my mind that price is coming into the weekly imbalance above, which it has already traded a little bit inside, I already know that price is targeting this internal range liquidity, this point. Okay, so what I have to do is wait for price to give me a market structure shift on the opening gap after trading into the opening gap, which I have one right here. Can decide to call this market structure shift, and some of you call it change of character. They are all same thing. So I'll wait for price to trade back into this point where it has had the market structure shift. Then I'll take my trade to the next liquidity. Okay, I decide to set a limit order to this point, or just 50% into this point. whichever you want to do. So this is basically how I trade a new week opening gap. Now, since this is on dollar index and I don't trade this dollar index, I only trade currency pairs. Then I use the dollar index to see what price is likely going to do, because they are 98% negatively correlated. Okay, let's go to the Euro USD. This is on the Euro USD, and then if you notice, you cannot find the gap here. It's filled with some candle. This is because I'm using a broker that refuses to show me this, which I don't know why. So I'm going to search for another broker. Okay, this is on Euro USD. Let's use this. Now you can see we have the gap right here on Euro USD. So whenever you have such confusion, you can just check on your next broker you're trading with, on trading view, I mean to say. So guys, as you can see, price traded into this, I think 30%, just like DSY. Since they're negatively correlated, you can see it traded halfway into this gap and then exploded above. Then we also have a market structure shift, which you see here. I would like to take trade when I see price comes down slowly, not aggressively, slowly. Then on the 5 minutes or 15 minutes, I get the market structure shift. I'm going to target this high, or this high, or even this high right here. That seems like equal high. I might target it, then wait for price to give me a confirmation of still going bearish. Okay, you can do the same analysis from the weekly time frame. You can do the same analysis on the AU, and you can see we also have, and that is why I said they are 80% negatively correlated. You can see you almost have the same price movement right here, the same price movement right here. Okay, and you can see also we have an imbalance which price is yet to trade into. So I think with this you'll be able to see that they are like 80%, 98% to 99% correlated. Okay, it's same price action. So if the dollar index is showing me this and the Euro USD is showing me that, it's a good confirmation for me to take the trade. That is why I mostly go to the DSY to analyze my market before coming down to the Euro USD. Okay, if this is my point of interest right here, I definitely will wait for DSY to reach my point of interest before taking the trade, because some of the times your point of interest might be on this place and DSY point of interest might be on this place. Okay, it will definitely respect that of the DSY before moving higher. Okay, just keep trying to compare these two pairs. You get the difference, and then you thank me later for that. And please, if you find this video helpful, don't forget to like, subscribe, and share to your friends as well. Thank you for watching.